Hello and welcome to My Finance Teacher. Weekend is coming and I hope you guys are enjoying your Friday, Friday 18th of May 2018. What time is it? It's time to look at what's happening to gold price. First of all, let's look at cycles. Generally, the intermediate cycles in gold last for about half a year. The current one has been going on since early December or first half of December. And we are in the time zone for the current one to finish within the next several weeks. It might be actually in the process of forming a low over here, although there is a chance that gold might continue moving down for another week or two, close to 1280, 1270. Nobody knows for sure. This arc over here, this yellow brownish arc, represents the normal duration for gold cycles. Moving back a little bit, we see gold cycles do usually follow this sort of a half a year intermediate cycle, half a year duration or so. So the duration of the current cycle, the fact that it has been going on since first part of December, and the fact that we have been experiencing this declining phase for several weeks, might tell us that gold is forming a low here, or is ready to form a low over the next week or two. And you know what's going to happen after that? After that, we are going to enter an advancing phase of the next intermediate cycle, and you want to be in. You want to take that train up, potentially to 1400. Another factor that indicates potential low being created now or very soon is RSI. This is a 14-day RSI. We are sort of close, very close to oversold levels. At the previous intermediate cycle low, gold price didn't actually go into the oversold level. It was again very close to those oversold levels, and that happened again in the middle of last year, and of course in December 2015 with a very strong pullback down. Before that, RSI was actually deep into oversold territory, but we are very close to oversold, indicating again a nice rally coming up soon. The next thing I want to have a look at is Fibonacci retracement numbers and how does it compare across the intermediate cycles over the last year and a half. So the current cycle, let's have a look at the current one. There's the top over here. The current cycle is close to retracing down to 62% retracement. Okay, that is often one of the strong support resistance lines. Let's have a look at what did we see in the past. Well, the previous intermediate cycle, there's the bottom, there's the top. The previous intermediate cycle actually retraced back down all the way to 78% retracement, right? How about the one before that? Let's have a look. The one before that, there's a low, there's a high. It retraced to 50%. The pull back down retraced 50% of the preceding rally. So we have 50%, then we have a relatively deep correction all the way down into two more levels down. Instead of a 50% retracement, instead of a 62% retracement, we have 78% retracement, and sort of something in between those two previous cases is the 62% retracement where gold price currently is at the moment. So this retracement is in line on average with what has been going on with gold over the last year and a half since the great decline from 2011 to 2015 has finished. So again, this indicates that current zone over here, or somewhere close to where we are at the moment, might prove to be a strong support and might be able to start the next intermediate rally. Since we're talking about this last year and a half after the bear market in gold finished, let's have a look at the general trend line within this year and a half. Right, if I put a line over here, I'm trying to connect these lows. I gotta go down a little because, as you see, the connection doesn't actually catch each of these lows. However, continuing this line actually shows me that gold price has retraced back down to this year and a half trend line. This might actually be our bear market trend line. It's close to it. It's very close to it. So we have actually observed this trend line for more than a year and a half. We've observed it for sort of 2.5 years. This is another good indication of a potential rally coming up over the next several weeks. And lastly, within this bull market in gold, I presume that we've finished with the bear when the price of gold dropped from 1900 all the way down to 1000. So within this bull market in gold, at the beginning of this bull market, as you see, there was quite a lot of volatility with Trump's elections over here. If you are going to try to catch gold somewhere over here, that is a price level of about 1230 or so, that would have been painful going down all the way to 1130. That's $100 decline. That's presumably if you try to buy on the premise that gold is below 200-day moving average, relatively far below, and it has to bounce back up. So if we cut out this high volatility area and just look at what has been going on, say over the last year and a half within these quite usual looking intermediate cycles, if you were buying gold somewhere here, then you would have made well. Why would you buy it there? Well, why say, for example, not here? It is also stretched below 200-day moving average over here. Of course, you would combine your analysis of different factors, the relative position of price itself and the 200-day moving average. You would also see that in the middle of 2017, gold is supposed to make an intermediate low based on the duration of these cycles, whereas over here in March 2017, you wouldn't expect a huge rally after this stretch below the 200-day moving average, since you've just experienced a couple of months of an intermediate advancing phase, although there was a rally over here as well. Anyway, what I'm trying to say is that one other factor that often indicates that an intermediate rally is coming up soon is the fact that price is sort of $30–40 below the 200-day moving average, and currently we're actually only $16 below 200-day moving average. And just as I said in my previous video, there is a probability that gold might continue down over the next several days, reaching, say, anywhere around 1280. So you might consider some long positions, although this is not investment advice. How about me personally? Well, as I mentioned in some of my previous videos, over here at the very beginning of May, I used about 30% of my gold related portfolio to make some purchase, and today on Friday I made another about 30% purchase, and I have another 30% to go in case if price of gold and gold miners continues to decline over the next couple of weeks. That will bring my average price down. However, nobody knows the future for sure, so if gold just shoots upwards from here, I'm not going to miss this rally. Thanks for your attention, and I wish you a nice weekend.